Hello, everyone. My name is John D'Agostino. I am the head of strategy for Coinbase Institutional. And we're here today with Coinbase Institutional presents On the Record, the Future of Finance. I'm here with Malhar Oza, the partner, COO, and general counsel of Finality Capital Partners. Welcome.
Thank you for having me on.
And you are formerly worked with Cole Freeman, which conference we're at today.
Yes.
And you were in, amongst other things, fund formation. And so you've seen over like almost 5-7 years, right?
Yes. Yeah.
And you've seen the growth of digital asset hedge funds. Cole Freeman was one of the sort of pioneers of law firms servicing those funds. And so you've been here through the ride. You're an OG.
Yeah.
And you come from
years. It's 5-7 years is a lifetime.
Lifetime, exactly. So you come from this world of sort of legal innovation, right? Helping these early funds create the right structures to do it properly.
Exactly.
So now that you're on the buy side and now that you're making allocation decisions, how do you bring in that background when you look at something like, say, tokenization?
Yeah, I mean, like I understand the legal infrastructure ever since it's I would say the inception of the industry in the digital asset industry. Mm-hmm. And so when new concepts start coming into play, like tokenization, right, they still technically have to fit within the securities laws or whatever legal regulation, infrastructure, and framework there was, existing. And so I bring my experience looking at that legal infrastructure and how it's changed over the course of the inception from digital asset innovation to kind of the current status, the state of the market, right? Mm-hmm. I think one of the things that I've really appreciated is I've seen accelerated growth within that. Like going from we didn't have any tokenized products. I think now we have a ton of tokenized products, right? And just seeing that growth from 0 to 100 has been really great to see.
So if we think about like Larry Fink has famously said recently, tokenization is going to eat the world. Everything will be tokenized, right? So we think about. And it seems like we're starting to see the beginning of that path, right? Serious institutions are talking about things like stablecoins and tokenizations. But just play devil's advocate from putting your legal hat on for a moment. Like, so if we think about a world 5, 10, 15, 20, 50 years, however long it is, where tokenization is the dominant form of economic distribution. Right. Do we have the legal road? Is that path laid out now? Or how much has to change to make that a reality?
Well, I don't think we have that legal road quite yet, in sense of if you want to see everything on chain. I think there's still regulatory clarity to come, for example. Mm-hmm. I liken it to like we're maybe on the first step, so to speak, right? We're seeing kind of these underlying rails coming on chain, stuff like that. And it's my job as our GC to ensure like, hey, look, when we make investments or when we look at the infrastructure of the digital asset industry, like, is this within the current, state of laws? Is this so out of the bounds of regulation that it's just not going to work? And those kind of assessments that we make on a daily basis.
As the GC, are there? You mentioned clarity, so there's Clarity Act, obviously. Are there other sort of really important rules, laws, things that you're looking forward to in the near term or medium term that we should pay attention to that would move the needle more on creating that regulatory and legal path?
Yeah. I mean, you mentioned the Clarity Act, but there's another one, the Genius Act, which was passed recently. I mean, it's going to take effect in a couple of years, but I think that's another thing that we look out for because it gives clarity to like the specific type of digital asset stablecoins. And so we understand what their interplay is in the digital asset ecosystem and exactly what is legal or correct or the right way to do that specific type of digital asset, and what is not allowed, and what won't be covered underneath the Genius Act.
I feel like you're making a very important distinction between a rule or a law being passed and then that law or rule being applied.
Yes.
And the form with which it's applied and adhered to. I think it's a very, very important point. Malhar, from a fund manager's perspective, right? I remember a time not so long ago, right, 5-7 years, where things like operational due diligence and where do we custody these assets as registered investment vehicles were real big problems, right? There was intractable problems to some degree. So we've come a long way since then. There are qualified custodial solutions. There's a wide variety of members of the ecosystem that fulfill ODD requirements.
Coinbase being one of them.
Thank you very much. But so as a fund manager perspective and a GC and a former fund attorney, like where are there still lingering ODD concerns or custody concerns? We're really at that place now where it's fully institutionally ready.
Yeah. So I wouldn't say one is fully institutional ready because I think, for example, Coinbase has its custody solution, but it doesn't custody every single token out there in the world. So if there's certain assets that just may not be custodied on what you would consider the premier solutions in the space at this point in time. And then there's problems that kind of stem off that because then you might be in breach of some rules because you're not actually at a qualified custodian, so to speak, where you need to technically keep all your assets, right?
Right.
And so there are these kind of gaps in the basically solutions right now, which are slowly getting there. And they've been built out, I would say, incredibly fast over the 5 to 7 years. When we went from literally zero to what we have now, which is a lot more comprehensive. But I can't say that we are in this state of industry where you really have 100% coverage. And it's like a comparable to traditional finance, it's just not the same.
And to some degree, it's as sociologists call some problems wicked problems if they're virtually impossible to solve. The open architecture nature of cryptocurrency allows for the creation of new instruments almost frictionless. And it's almost impossible to play catch up, right? You literally can't custody every asset because every given day there could be thousands or theoretically millions of new assets, right? So the industry seems to always have to play that catch-up issue.
Yeah. I mean, and it does, and that's, I mean, that is one of the kind of the problems here. And so maybe there has been schools of thought that, hey, look, for digital assets, there should be some slightly different approaches to kind of the rules applied, so that you're not forced to play catch-up 24/7 and have these kind of gaps in solutions.
Because if there's a rule that does not meet the current reality, ultimately the investors are the ones who lose out because they're unable to have access to those assets, right?
And we at Finality, for example, the way we solve for that is essentially we realize that certain of these assets are not able to use a qualified custodian. And so what we do is we do have to self-custody them with wallets, but we use solutions that are secure, place investor interest first. We're in line with our fiduciary duty. So these are the type of things that, in my opinion, are actually good for the industry. And we are hoping that the regulation and the rulemaking sometimes catches up to that a little bit. That allows for a little bit more flexibility in that sense.
Can you see a day where we have a qualified self-custodial designation?
That would be the ideal, and I think that's something that we would love to see. Like specific rules, regulations, lawmaking around if we're going to have a self-custodial type solution, like what does that look like? And clarity around that would be great. And that's something that we at Finality would love to see.
Right. So we've obviously had this massive shift in the U.S. from a regulatory and government perspective in the openness and the dropping of an adversarial relationship with innovation, both in AI and in crypto. It's profound. I'm curious, are there strategies, products, ideas that were just untenable from an investment point of view 6 months ago that you're now like, that might work?
Oh, I mean, so many. I don't know where to start, but I'll just start
pick your top. Top one is here.
Token launches, right? Like that was one thing where people were so afraid to launch tokens and have U.S. investors potentially hold them. And there was all these structuring problems around that. And there was like tokenomic issues, trying to not be considered a security or this or that. And one of the reasons was, there was regulatory, let's say uncertainty or lack of regulatory clarity. But there was also, on the other hand, a very heavy enforcement hammer. And that's, I think, where you're talking about this change in kind of the politics here, where that enforcement hammer has almost completely evaporated. And I think that's a good thing for the industry because, a lot of these companies, a lot of these token launches, a lot of portfolio companies are really trying to just build a better product in the digital asset ecosystem. They're not looking to commit misconduct or fraud or whatnot. And unfortunately, you would have the SEC come down with a large ban, like a large hammer. And there was a lot of just, I guess, fear based around that.
Sure.
I would say that's probably like the number one thing I'm seeing, where now this enforcement hammer is gone. So people are willing to be creative and innovate and really push this ecosystem forward.
And it kind of goes without saying, not only does it open up the opportunity for companies to sell to U.S. investors, by definition, it then allows U.S. investors the opportunity to take advantage of this asset class.
Exactly.
Which, as you pointed out, being a U.S. investor, you were toxic for years because there was so much fear that the U.S. regulators would extrajudicially, like outside of even their remit, go after these non-U.S. companies for trying to access U.S. investors.
You're 100% right. I mean, you're the nail on the head. And I think that's where that has changed significantly. And I think it's a positive change for innovation and creativity for the entire digital asset ecosystem.
Yeah, and allows U.S. investors opportunity that they didn't have before. So Malhar, in your former life, you spent a lot of time thinking about how funds should engage with their LPs. I was a fund director for a long time. I was fund director at the request of Cole Freeman for some time. And that's what we do. We think about this relationship between GPs and LPs, which is cooperative. They're all in it together. They're all looking to make money. But there's some elements that can be adversarial, right, from time to time. And the goal of all the advisors, governance, legal, whatever, is to make sure everyone's kind of working towards the same goal, right, which is outlined in the fund documentation. And there's a long history of that in traditional, there's been decades and decades of precedent being set. So for crypto, you have idiosyncrasies, right? You have funds like yours that you don't have in TradFi, where you have liquid and illiquid vehicles in the same pool, right? That's an unusual thing that's very common in crypto, not common in TradFi. So is there an inherent increase in tension between these unique models and investor protection? Or is it just something we need to kind of work through over time?
I don't think there's a tension between investor protections and these like you said, crypto native or digital asset native fund models. I think it really just is a different type of investment product. It's not your traditional private equity or venture capital fund. And it's also not your traditional long short equities vehicle. You're combining some of the benefits of both of these things. Like you're going to invest in an illiquid asset that hopes to become very liquid in the near future. You're going to take advantage of yield opportunities in current liquid markets. And these are, I think, come together to create, in a positive way, a new type of investment vehicle with different risk profiles for these types of investors. And I don't think they're any less safe or secure, or, for example, give investors way more risk, liability, anything of that sort, just simply because simply because of the difference in the model.
I'm just going to follow on question, and we could cut it later, but I'm just kind of curious what you think about this. So the U.S. has an interesting and idiosyncratic approach towards investor protection, specifically around what it considers to be a qualified investor or purchaser.
Yes.
Most of the world uses either a knowledge base or a opt-in based. So treat me like I'm accredited, treat me like I'm sophisticated. And there's a give and take, right? So by doing that, you give up some rights as investors, but you get access to more complex investments. Whereas the U.S. uses a wealth determination.
Wealth yes.
I have been in conversations with, even in our prior SEC, where there was serious consideration being given to, are we right? Should we be this way? The rest of the world sees it this way. We have this, some you could argue, arbitrary wealth determination. Do you see that changing, and do you think that should change?
So those are two separate questions.
Sure.
I will first answer, do I think that should change? I would like to personally see that changed. I think the wealth test is a little antiquated because the thought process behind that, the public policy behind that was to say, hey, look, can this investor withstand the loss of this investment? Right? But we're reaching an information age. We have the internet, right? I mean, these things were passed, these qualifications that we're discussing. I mean, some of them were passed, with 1940 legislation, right? Like these kind of things. And so it's not, I don't think it's kept up with the times. We're in a much better information age now. So I think having actual knowledgeable investors is probably better for the asset class, but it actually produces a more informed investor, as opposed to just say, hey, I have $10 million in assets. I may not know nothing about the asset class, but now I'm allowed to invest. And someone who's actually done the research, who's actually involved in the asset class, may not be allowed to invest. So I think there is that issue in the United States where it's a little big brothery, I would say. They want to try to, they call it investor protection. I don't think it's a sustainable approach. And I think the other approach is a lot more efficient.
There's also an inherent unfairness.
Yeah.
That I can understand people feeling. I get the idea of we have to be thoughtful about whether you can withstand the losses or not, but there does appear to be an inherent unfairness that just because I'm not at a certain wealth level, I am cut off from access to investments that could ironically potentially get me to that wealth level.
I mean, if you've looked at some of the private fund returns in the digital asset space, right? I mean, it's been totally cut off to retail or like I would say, lower wealth investors who may not meet a qualified purchaser threshold, for example, which is 5 million in investable assets, right? And I think that's something where you're right, inherently unfair. And the other side of that coin is that it's concentrated kind of a lot of these allocations to, kind of gate kept a lot of the market out of it, which is unfortunate. And so, do I think that will actually change? I don't know if it will actually change.
I would have agreed with you a couple of years ago. This cooperation between the SEC and CFTC that we're seeing just appears absolutely unprecedented. I think nothing's off the table.
I hope you're right. I honestly hope you're right. I think that'd be a great thing for the industry as a whole.
So Malhar, you talked before about things we should be looking out for, the Clarity Act and other things. If you were in charge, if you could wave your magic regulatory wand and make one thing happen in the next 12 to 18 months, what would it be?
I think it would be essentially a version of the Clarity Act being passed like right away. Right now, there's competing versions in the, that are at play within the House and the Senate and stuff like that. And there's various schools of thought behind it. And so from a legal perspective, it's been hard to tell like kind of my portfolio companies what to expect because there are very different looking versions of these things. We think, I think from a general perspective, we're happy something's coming out. But I'd like to see how that looks exactly, because that means I can then tell my portfolio companies, my colleagues in the industry, exactly what, tokens are going to be in security tokens, commodities, under what regulation, exactly how to go from zero, if you are just starting a business and launching a token, to what that is going to look like in your 5-year timeline. And I think that would be great because from a venture perspective, that I could provide guidance to my all my portfolio companies to the T. Right now, I'm still saying, hey, look, we're on, we have clarity coming. Do I know how that's going to look like in 12 to 18 months? I don't know.
Is there a specific version you like more than the others?
I think the one that was proposed originally, where I think, there's been a few versions around, and I don't put me on these names, but I think there was one where they would basically be commodities. There was a safe harbor for 3 years, and only specific tokens would be considered securities. I think that approach would make things a lot easier because we can trade these on exchanges. People can hold them without this sort of am I doing something wrong?
So the OG version before it got watered down with all the negotiating.
Exactly.
Okay, got it.
Exactly.
Well, Malhar, thank you so much for joining. This was fantastic. Really appreciate your time.
Yeah. Thanks, Rob.